And so it's that time again when we go around the world of business. It's 1 p.m. Let's do this in 55 minutes. Here's what's coming up on the program today. Nigeria's economic managers defend the administration's policy in the midst of high cost of living in the country. And global cocoa prices hit record high. Uganda is set to get about $30 million loan from OPEC fund. Good afternoon, I'm John Mekwa. Let's get right into business. Oil prices were a little changed on Friday, staying on track for weekly gains with tensions persisting in the Middle East after Israel rejected a ceasefire offer from Hamas. Brent crude futures slipped 0.16% to $81.50 a barrel, while U.S. West Texas Intermediate crude futures shed 0.05% to $76.18 a barrel. Both benchmarks rose about 3% in the previous session as Israeli forces bombed the southern border city of Rafah on Thursday after Prime Minister Benjamin Netanyahu rejected a proposal to end the war in the Palestinian enclave. The tensions have kept oil prices elevated, with Brent and WTI both set to gain more than 5% for the week. U.S. officials made their most pointed criticism so far of Israel's civilian casualties in Gaza as it turned the focus of its offensive to Rafah. A Hamas delegation arrived in Cairo yesterday, Thursday, for ceasefire talks with mediators, Egypt and Qatar. While the conflict has propped up prices, there's been no impact on oil production. Non-OPEC output from Norway and Guyana is increasing, while Russia is exporting more crude in February than it planned, following a combination of drone attacks and technical outages at its refineries that could undermine its pledge to curb sales under an OPEC Plus pact. Still staying in the global space, Chicago soybeans slipped on Friday with prices under pressure from expectations of higher world supplies, even as forecasters reduced their production estimate for top exporter Brazil. Corn eased, with the market poised for a second weekly loss, while wheat firmed, although prices were set to end the week in negative territory. The most active soybean contracts on the Chicago Board of Trade fell 0.1% to $11.92 for a bushel. The market dropped this week to its lowest level since December 2020 and has climbed 0.3% so far this week. Corn was down 0.4% at $4.31 for 3/4 of a bushel. Wheat added 0.3% to $5.90 for a bushel. For the week, corn is down 2.5%, while wheat has lost 1.7%. The soybean market is facing headwinds amid abundant world supplies and slowing demand from top importer China, and that offset the impact of lower output expected from Brazil, which is the world's #1 exporter. Still in the grain space now, global cocoa prices have hit fresh record highs due to supply concerns by traders amid the wider impact of adverse weather conditions. The price of the commodity have particularly been given up by poor harvest in West Africa, which produces the bulk of global supply. The El Nino weather phenomenon has been causing drier weather in Ghana and Ivory Coast, which are the world's two biggest producers of cocoa beans. Hotter temperatures and shifts in rainfall patterns of climate change have also been having impacts on harvest. Traders are worried about another short production year, predicting ever wider deficits this season, with concerns growing for the next. And this has raised the price of chocolate by major producers such as Hershey's and Cadbury. And then we come to Nigeria. That's a CBN story. Just a few minutes before I got here, the Central Bank of Nigeria has shared a statement removing the spread on foreign exchange transactions as part of ongoing reforms to unify exchange rates in the country. According to a statement signed by the Director of Financial Markets of the CBN, Dr. Molara Duke, authorized dealers are to continue to conduct their foreign exchange transactions on a willing buyer, willing seller basis. And yes, now we go to the labor market, where the Nigeria Labour Congress and Trade Union Congress have issued a 2-week ultimatum to the federal government to address what they describe as worsening state of the economy and its attendant effects on the citizens. A joint statement issued by the labor centers and signed by their presidents expressed concern over non-implementation of the 16-point agreement reached with the federal government on how to cushion the effect of fuel subsidy removal and improve the welfare of workers. The statement describes the non-implementation of those agreements as a blatant disregard for principles of good faith, welfare and rights of Nigerian workers. The unions therefore maintain that the federal government has 2 weeks, beginning from today, to honor its part of the agreement with the workers. Protests over rising cost of living have become commonplace, as we've been reporting right here on Channels Television. Now let's look at the possible cost of this down tool threatened by the union workers. Well, I guess we also have to say that it's not just in Nigeria. This week, I think twice we've talked about strikes in Germany from the airspace, that's the airline workers have also down tool. We've seen farmers take to the streets also in Europe, Paris, I think France, they've down tool also to protest some condition which they say are not friendly to them. But first of all, before we get to the conversation we should have on this, all of these well, demanded attention from every arm of government. The lawmakers have also taken to this, and so just a few minutes ago, that's when it ended. We had the economic managers of Nigeria that were before the lawmakers to defend the policies. We have some promises from the CBN governor, Mr. Olayemi Cardoso, promising that inflation will drop to about 21% using the inflation target policy, which the Central Bank of Nigeria has adopted. Of course, we also had the coordinating minister of the economy, Mr. Wale Edun. Both of them spoke to the lawmakers to defend the policies. And so let's hear this, just a bit of it. We'll have a bigger package for you later on our subsequent news bulletins right here on Channels Television. But we just got snippets from both of them in their defense of the policies adopted by this administration.
Long delay in changing to a path of policies that are sustainable in terms of revenue, in terms of expenditure, and in terms of the industrial policies that will grow the economy. So let us focus, as you have done, on the very short term, where the issue of inflation and related issue of foreign exchange depreciation are the major concern. And let me say that, the senator talked also about the market and the fact that you just cannot leave things to the market. While this administration does believe that in most cases, market activity may deliver, in most circumstances, the kind of outcomes that we want. we also understand that there are contexts in which the market will not deliver the desired results. And it's the appreciation of this particular fact that has led to the intervention, the idea of intervening in the marketplace on behalf of the poor and the most vulnerable.
The Emergency Committee on Food Security, set up by the President, has been taking a number of measures, and we see an end in sight to the persistent rise of food inflation. On our side at the CBN, we have responded with significant monetary policy tightening to rein in inflationary pressures. Empirical analysis has established that money supply is one of the factors fueling the current inflationary pressure. For instance, an analysis of the trend of money supply spanning over 9 months showed that M3 increased from 52 trillion in January 2023 to 68.2 trillion in November 2023, representing 16.24 trillion or 31% increase over the period. Increase in net foreign assets following the harmonization of exchange rates and ways and means advances were the major factors driving the increase in money supply. We have also halted quasi-fiscal measures totaling over 10 trillion naira by the central bank, previously disguised as development finance intervention.
Yeah, well, I think that statement by the governor of Central Bank, the intervention fund, which he said was previously disguised. I know a lot of people will feed on that in the coming days, and we have a lot to say. Well, just before we head, to continue that conversation, obviously, why the reason we have those economic managers before the lawmakers, would like to say again that another effort of the central bank to boost the value of the naira is what they have just done. A couple of minutes ago, they shared a statement signed by the Director of Financial Markets Department, Dr. Molara Duke, saying that they've removed the spread on foreign exchange transactions as part of the reforms to unify the exchange rate in the country. So now authorized dealers can continue to conduct their foreign exchange transactions on a willing buyer, willing seller basis. Now, the reason why we even have the economic managers before the lawmakers is because of the hike in the cost of living. Basic staple food have become extremely expensive, especially for those at the lower cadre of the economy. We've seen protests. We've seen in Niger State, we've seen in Suleja, and we've seen in Kano State, the women, the bakers came out also to speak against this. And now labor unions have added their voices, and they are saying that they're giving the government 14 days, else they'll be down to. Of course, that has its own price and cost to the economy. Let's look at both sides now, see which one is more expensive with the economy. And to have this conversation is Mr. Ayode Jebo, is the Managing Director of Optimus by AfriInvest. Mr. Ebo, thank you so much for your time this afternoon.
Yeah, thank you for having me. Good afternoon.
Yeah. So I guess where to start is to be or not to be. If the unions, if the workers down to, it costs the economy something. If they don't down to, we've already started seeing protests by, the unorganized labor and women and youth taking up to the street. That obviously will also cost the economy something. How do we weigh these two costs?
Okay, thank you, and really valid point. But I think for the union, I feel that when we look at in terms of the effectiveness and the impact, some of the down tools or strike as cost, I think it leads to more negative impact on the economy than using other tools or other measures of engagement, I think, with the government. So I would see that most times what we actually see is let there be more, maybe I would say, constructive based on policies. So if this strike or is coming up, what are the policies that will be holding government to, that have been well crafted, that we can partner with the government to see that we begin to see the impact of those policies, and rather than just go on strike based on yes, it's really a challenging and tough time for Nigeria, but if we're also not careful, this can also aggravate or even worsen that situation, because when you look at the income earning capacity of Nigerians, most times you have people earn money daily. So if you short that opportunity, things may get worse if it's prolonged for long. So I would say that, yes, there's no silver bullet to solving this problem, but there may be more to adopt more constructive ways that, which is policy driven. We are all talking about ITEPs. Can we have reasons why engagement that around the ITEP that will all impact, that is impacting on FX and impacting on revenue of Nigerians? That's if the people are hearing that the objective of a strike is because of this, that even you would win also the heart of more Nigerians to join in this fight. Yeah, thank you.
Yeah, so I guess the frustration of the unions is that there have been talks, and they had agreements. I know we stayed on that matter for weeks. Then, they had a committee. I think they had even up to 2 committees that were supposed to deliberate on that with government and the unions. And now time for implementation. So I don't think that the federal government has told the unions, we have not implemented because we cannot afford it. Perhaps that's where, you're talking about the issue of boosting our oil production and making more revenue available. I guess that's where the frustration of the workers comes from.
Okay, I get that, and it's really, to be candid, is really a very germane cause, but it's also trying to look at the overall impact. When you look at policies, there are always those that are positive, those that will be negative. But when you want to take decisions, you need to be sure that it's going to have overall net positive impact. So the cost of the NLC is germane, fighting for the workers, and it's also on the part of the government. There's also a need to honor agreements, which is really very valid. So I'm just looking at it from the overall economic impact, such that even for those that the NLC is trying to protect, don't suffer more than the position where are there other ways, continued engagement that can be done before finally embarking on strike. And just to be fair to them, I know a lot of engagement has been done, a lot of committees have been formed, but it's really a tough call. But the overall impact, it's important to look at the overall impact Nigeria. So you see that the workers, when you look at workers, what the proportion of the total population, even governments, when you look at government's contribution as a proportion of the total economy is still also less than 10% to GDP. So what happens to the overall other 90% if there's no movement on a daily basis? If we are able to quantify how much do we lose, even if you do on the back of the envelope analysis of looking at the GDP, private sector GDP, and you divide it by a certain number of days, look at some of those sectors that are being shut down, you will see that we are actually losing a lot. And if it's prolonged, it may be a major drag that the cost that the union is trying to push may eventually now come back to put us in a more drastic position or favorable position.
So maybe, Mr. Ebo, what we could look at is communication. I mean, before now, I've had this conversation with a couple of people, and they say perhaps the government is not communicating enough. But we saw the president has now ordered grains to be released from the reserve. We've seen Niger State Governor also take some strong stance, which, in some ways have also caused some other controversy. But I guess when we talk about communication, it's not just about what the government or representative of the administration say, but what they do. For instance, how much squeeze are they feeling if we're all in this together? That could give the people confidence that we will come out of this soon because we are all in it together. But if the elites are still not feeling the impact, that it means we're going to be in this for a longer time.
Yes, Ini, I think it's well said. We look at there's a need for more communication. There's a need for engagement, because if there's less communication, it gives room for a lot of speculation. It gives room for a lot of assumptions. So that needs to, there's a need to improve in that light, because currently if we look at based on the fact, and that's why even as analysts, you look at the figures to discuss, and based on your engagement with stakeholders in the economy, so you will know that things are not going the way it should. So there needs to be an period when in this kind of situation, you have more engagement. You've seen it in developed climes, trying to provide a bit of assurance for the citizens that it's only a matter of time. So there can be more periodic and more frequent communication on the current situation we have, especially if there's been an agreement. There needs to be more communication as to why it has not been implemented. So you would see it would be scientific, it would be justified. You see the reason why it's not possible now, why maybe you have to wait for additional 2 months. So that, I think, it's really very important, so that we all want the progress of this economy. Like you said, we're all suffering the brunt. Nobody can exclude itself from the exchange rate, both from the top people in the country as to everybody is suffering the brunt of this. So there's a need to communicate, and for us to see that clear roadmap that we would take, that will very soon, there will be light at the end of the tunnel. But that communication, I think, is really a valid point that maybe needs to be more emphasized.
So perhaps now that the labor unions have given an ultimatum, you would see a reconvening of the meeting, the committee and the union. Perhaps that's where the conversation will start from. Because, I don't know if the economy can afford a strike at this time. We're just at the brink,
Yes, you are correct. It's really very fragile. Prices of things are already high. So imagine there's a major shutdown and there's no, in terms of transportation. It means that even the available quantity or the goods available, the prices would skyrocket. And as a result, if there's no movement, supply of fuel around, you see that prices would increase. So, and that is what I'm saying, that at the end of the day, the overall impact may now be negative, that people may be worse off than where they were even before the strike, if it's prolonged.
All right, thank you so much, Managing Director of Optimus by Afrinvest, Mr. Ayode Jebel, for your sharing your perspective with us.
Always my pleasure. Thanks for having me.
So there we have, we're in the middle of it. I think they say between the blue sea and the devil and the blue sea. We go on strike, it costs the economy something. We don't go on strike, people can continue to stay hungry and get even more frustrated and irritated, and we don't know which way it could take. So we do hope that the government will wake up to this and calm the nerves of not just the unions, but even those in the informal sector. Let's take a break now. When we come back on Business Incorporated, we'll head to the market. We'll still have to go to Berlin. It's right here on Business Incorporated on Channels Television. Join us again. Welcome back to watching Business Incorporated right here on Channels Television. We have to say our protest against dry ATMs is still on. on channel television. But I have to say that this week I had tried to use the POS, and I've seen a little bit of a decrease in the prices. Well, the person that I dealt with, that is, because formerly it used to be if you want to withdraw 20,000 naira, you'll be charged 1,000 naira, you know, but I guess the reduction in demand for the POS operators is reducing, and so we see them tapering the price. But the ATMs are still dry, and that is what we're against, because the ATMs are supposed to give Nigerians the option of withdrawing their money to spend, you know, and not paying for their money. We still have to pay charges for the ATMs, but it's not as much as we are being charged by POS operators, and some of them say they have to source for naira. That is why they charge so much. Some of them have to buy from filling stations. Banks only give them about 20,000 naira. I mean, if POS operators are given 20,000 naira, where do you expect them, you know, to get cash to run their businesses to satisfy the demand of Nigerians? So we're still protesting. Let the ATMs be loaded in Nigeria. Please, Central Bank of Nigeria, look into this. Reach out to the banks. You're the regulator. We know your hands are full. You're dealing with the FX issue, but please, you need also to deal with the naira issue and let the ATMs be functional and not covered with dust, which is what is happening in a lot of places, especially here in Lagos. Anyways, let's head to the markets now and look at intraday. And we have joining us for that conversation Ambrose Omodion. Ambrose Omodion is the Chief Research Officer, Invest Data Consulting Limited. Good afternoon, Ambrose. Good to have you on the show.
Good afternoon. Thanks for having me.
Great. So how's the market looking intraday?
Yeah, the market is still positive at this hour. I'll tell you that after the 4 days pullback, we are seeing an investor, entering back at the lower price because the market is about buy low and sell high. For me, it's a good one, but we can't say yes, the market is there now. But market is trying to recover. And from next week, as we expect to see more corporate earnings, that will give the market the boost expected. But don't forget that at this time, investors also are trying to reassess the opportunity in the physical market as a result of higher yield was seen after the last auction on Wednesday. That is it there. But I believe that when inflation figure hit the market by next week, that will give a clear direction where those fixed income players should be. Because if inflation goes as high as 30, and we are rejoicing that we are having a 19% yield for 1 year, you see whether you are in a safer hand. Because when inflation is going on, that means you are actually having a real negative return. That's why people that are wise are looking at how they can marry the dividend season and the capital appreciation in this short term, because if you are waiting for 1 year to get 19% and I can get 20%, even 35% within less than 2 weeks or a month, that is better for me than I'm waiting for. That's why the players should be for banking sector, because they are the major players in the money market. For me, for design investors as smart trader, take advantage of market pulling back to buy at a low price ahead of what corporate earnings.
Yeah, so Ambrose, we were celebrating 2 days ago after the auction on Wednesday, obviously, the hike in the yields, 19%. But by close of market yesterday, we learned it had dropped to 16%. Do you see these investors running back to the equities market with this, of course, the downward turn of yields?
Yeah, actually, market timing is very, very important when it comes to investing. Like I said earlier, if you are waiting for 364 days to make a 19%, or now it has dropped to 60%, and I can have dividend yield from a company 10% in less than, because I tell you, most of the companies that will announce their results in the month of February and March, before the end of April, most of them have done their AGM, they have paid you your dividend. And also, if the market continues to recover and also add to your capital appreciation, you'll be better off. I believe that people are thinking where to put their money. Is it where they have higher risk or where they have less risk? Because the attractive in the physical market is the low risk. But why do that invest in equity are taking calculated risk to make higher return?
So today is Friday. How do you see the market closing and then heading into next week? Do you see it getting the same attention it got this week? I think there's another auction upper week in the next 2 weeks. But for next week, what do you see?
In 2 weeks' time. For me, this now that pull back to sustain. And also, we expect that the early filers of the corporate end will start in the market from next week. The performance and also the corporate action will determine how fast it can recover. But I believe that today is a sign that market is also recovering. If the trend continues next week, that will be good. But I believe that market will feed on the earnings that we're expecting. And also inflation figure that will come by next week also open the eyes of those in fixed income market and those also that trade equity will be a better instrument or window to put your money. It depends on your own investment objective. But I believe that for those that are not as big as banks, the banks play more on the money market, also strategize and see where they can put their money for short-term return.
How much chance do individual investors have in this? I know you've been talking about institutional investors.
Yeah, why banks are going to have big money, but for people like me and you that are retail investors, you know why you're in the market. If you are dividend investor, this pullback is opportunity for you to come back to the market. If you're a trader, this pullback is opportunity for you to come to the market because you have more money. Doesn't mean that you won't take wise investment decision. Now the price have pulled back after seeing a kind of fear of not missing out that pushed the market in January to almost 40% in that month alone. We're seeing correction to create opportunity for new entrants. Those that know what they're doing in the market, that have good rules and also trade plan, to come back to the market, let the algo guide them and not trade their plans to also make money. That's why the market is oscillating. Because oscillation is the beauty of the market. Anywhere in the world, that is the market dynamics. You buy low, you sell high, profit taking, the opportunity for price to come low, you buy. These dynamics in the market will continue, whether in the mature market or our market, that trend will be there.
All right, Ambrose from Audio, thank you so much for sharing your thoughts with us and observations from the markets.
Thanks for having me.
Okay, so let's go to other markets, beginning with the NGX. Intraday, the market had recovered a bit from what we closed with yesterday. So it gained 0.74%, still at 101,000, but closed at 102. Hopefully by the close of the market, it would have hit 102. For South Africa, it's a red market, 0.14%. In the red right there at 73,622.94. There was a time not long ago when South Africa used to do 74 and Nigeria used to do 50. So see how things have changed for now, not just with the football, but right here also. Let's see other markets. Egypt closed very, very green yesterday. They are closed for today. So this is what they closed with on Thursday at 1.81%. 28,411.41 there. Kenya also striving, but has lost its 100 points. That would be its norm. Has been for a bit now. Gained intraday close of trade yesterday 0.08. Now we move over to the Middle East to see how that market is looking at this time. And we see Abu Dhabi is in the red intraday 0.24% at 9,340.59. Dubai, however, is on the flip side, did a little bit better, 0.2% in the green. 4,167.35. If we see other markets in that region for intraday, there you have it. Saudi Arabia is closed and Qatar. These are Thursday's closing numbers. Saudi Arabia closed at 0.30% and Qatar also closed, but closed in the red, 0.29%. If we consider the Asian market and see how that has done, close, they're ahead of us when it comes to timing. So we see the Japan's Nikkei hit a fresh 34-year high today. Our most Asia-Pacific markets were either fully or partially closed. They have a holiday there. But the Nikkei hit a new, 34-year high at 0.09%, 36%, 897.42. The Kospi is also in the green, looking really comfortable there, 0.41%, 2,620.32. The Hang Seng index is over. On the flip side, it's down 0.83%. On Friday, Bank of Japan governor reportedly told the country's lower house that easy money conditions will persist even if the Bank of Japan scraps its negative interest rate policy. Well, China, South Korea, and Taiwan's market are shut. So, I told you some of those markets are shut there for the holiday. While Singapore and Hong Kong saw a half day of trading right there. Now let's head to the United States, see how that's doing. That's the features. You know, they are behind when it comes to the hour. Stock features were around flat on Friday morning after the S&P crossed the historic 5,000 milestone for the first time during intraday. Looking at the numbers, the Dow Jones in the red, the features in the red, 0.03% at 38,813 for the features on Dow Jones. And then the S&P 500 still doing negative after it crossed that landmark 5,020.25 and added 0.05%, while the Nasdaq for technology guys gained 0.20%. The large cap benchmark reached a height of that 5,000 during Thursday's regular trading before closing more than 3 points below that. So that's the U.S. market. But let's take some hours back and meet with Maria Bird, our correspondent in Washington, to give us a recap of Thursday's markets.
The U.S. stock market saw growth on Thursday as the Dow Jones and the S&P 500 almost hit record highs, as Disney had an upswing that many investors were excited about. The Dow Jones was up at 0.13%, the S&P 500 up at 0.06%, and the heavy tech Nasdaq was up at 0.2%. Many investors are watching to see what will happen before the end of the week, as it's hopeful that we will begin to see the second quarter might be a little bit stronger than once was expected.
Yeah, we know that the U.S. market is very data sensitive, moves one way or the other, depending on the data available. So, well, that's all for the markets, at least before we head to crypto. But let's go to South Africa, see some things happening in Africa. South Africa's manufacturing production was disappointed in December, according to a report published by the Pretoria-based Statistics South Africa. The output increased by 0.7% compared to a year earlier, and that's down from an upwardly revised 2.5% in November. Month on month, production contracted by 1.7%, both figures falling short of analysts' expectations. Let's join Innocent Semosa there in South Africa to give us the details of this.
According to Stats SA, the manufacturing sector in South Africa contributes around 12.27% to the country's gross domestic product. South Africa's December production contrasts by 1.7%. Deputy Minister of Public Enterprises, Obert Babela, attributes this to inadequate logistic infrastructure.
We should have connected Africa on rail, and then the air also are not as connected. Some of the people who are producing flowers in South Africa, after plantation season harvesting, they take the flowers to the market. And when they go into cargo, the cargo takes them to Netherlands or to France, and then from France back to Africa. It's very expensive. But also we don't build ships that we can apply to the maritime to say, these routes now we need as African continent, apply for them so that a ship can move from one coast to the other, delivering goods that connects to our continent. So for domestic, we have to get our sugar plantation, sugar canes from Brazil. The ship does not come across Atlantic. It must go to Holland, dock there, and then another one come, because they say there's no international route between Brazil and South Africa or Africa. And yet we are just opposite each other.
Given these challenges, can South Africa effectively attract investors? Managing Director at Repetition First, Tshepo Matseba, explains.
Look, investors want predictability, so they want to know that an environment that you go in to invest is predictable, in the sense that you know that the energy supply is stable, you know that the country is relatively stable in terms of infrastructure, that the financial system and the banking system are functional and not compromised, and that there's leadership stability. And so I think the investors are looking for that kind of indication that there'll be leadership stability. And can South Africa attract investors? We certainly can. And even if you look at the fact that the Americans, for example, are a bit uncomfortable with South Africa's taking Israel to The Hague, the Americans are not in a position to actually literally just disinvest in South Africa. Companies such as Ford are invested in South Africa, and that investment will continue to grow.
That are now in development.
Delivering his State of the Nation address, President Cyril Ramaphosa said the momentum towards Transnet reform will increase this year. From Johannesburg, South Africa, Innocent Semosa, Channels Television News.
Well, talking about production, manufacturing, manufacturers back here in Nigeria are not very happy with the ban on sachet spirit drinks by NAFDAC, and they say that there are conversations and committees working on how to restrict the spread of alcohol, especially to the youths. And so the ban from NAFDAC has come as a surprise and will cost about 500,000 jobs in the industry.
We have been engaged in a conversation that has mapped out plans which we have religiously implemented and spent more than R1 billion to be able to do education, to be able to put in regulations that will restrict access by underage people. We also have cooperated with them, and we are making progressive inroads into limiting this access. And we have evidence to show that we are achieving success. As a matter of fact, the committee itself commissioned a survey, a research into what milestones have been achieved. We think that the ban is not helpful because it's going to actually open the floodgate for illicits to enter into the market. There are sales of Paraga, which is the unwholesome alternative to this alcohol in PET bottles, in PET. So it is not helpful. It is actually being penny wise pound foolish, if I may use the word, because it won't lead to the achievement of your objective. The only thing is that you are effectively closing the shop of those who make wholesome products, those who you can regulate, those whose factory you know and you can have a conversation with them, vis-a-vis those that you cannot hold, you do not know where they operate, you do not know the composition, and you are also opening the gate for influx of those foreign ones that you have no control over their standards.
The Director General of Manufacturers Association of Nigeria was a guest on Business Morning earlier today. Yesterday, there was that meeting between the NNPCL boss and the Central Bank of Nigeria. They came to terms with a definition to define clear boundaries regarding the management of revenue generated by the oil corporation. Following the meeting between the CBN and NNPCL, the Apex Bank will now hold a significant portion of NNPCL revenue from oil sales. And this is coming after the directive by the President, that's President Bola Tinubu, for the NNPCL to transfer revenue from crude oil sales to the Central Bank of Nigeria.
We understand very clearly that this review of our decision to move significant portion of our revenues to the Central Bank of Nigeria is very timely. We made that decision to align with the directives of our board of directors to maintain safe obligor limits with commercial banks. And for us to do this, we do need an additional support, particularly from the Central Bank, to achieve this. We're a very huge company. Our transaction and liquidity levels are very high, and perhaps we are the largest business in this country. And we're also happy that the CBN has created very, very robust digital platform for our transactions, and also created a department that will deal with NNPC issues, and it will create no hindrance to our operation. We will continue to collaborate with the Central Bank of Nigeria to ensure that further improvements are received to ensure that this relationship serves the best interests of our company and, of course, ultimately our country.
We have come to this particular stage where the NNPC has made the decision to move its respectable part of its business to the Central Bank of Nigeria. And I also want to say that we have restructured and strengthened our internal processes such that we will be very capable of taking on this enormous responsibility that will be placed in the central bank.
I must say Mr. Kadusu has been really busy That was yesterday. Today he was before the lawmakers. Very busy, I guess, because the economy needs to be stable and investors need to have a sense of certainty, about the direction of the economy. Now, let's leave Nigeria. The Organization of Petroleum Exporting Countries, OPEC, the Fund for International Development, is extending a $30 million loan to support the development of a key transportation link in Uganda. The project is co-financed by Islamic Development Bank and the government of Uganda. The Katin-Ochero Road is located in the central eastern region of Uganda in the Soroti district. The 70-kilometer road will be upgraded from gravel to a paved road, which will allow for faster and safer travels, offering local rural communities improved travel connections. The development will also benefit local small businesses by providing access to marketplaces and shops. To date, the OPEC Fund has provided about $290 million to support sustainable development in Uganda, financing more than 20 projects in education, health, transportation, agriculture, and energy. Okay, now let's head to the crypto board and see how the numbers are looking this afternoon. I know I got that notification late yesterday that Bitcoin is doing well. Yeah, so Bitcoin is at $46,000, $583.32. That's up 4.24%. Been a while since we saw, it at 46. I'm looking forward to 65,000. I'm not moved by this. Ethereum also gained 1.76% at $2,466.71. BNB Green, XRP, Cardano, Solana. Not everybody, though, but a lot of the guys that we're familiar with in green at this time, even Doge, only just a bit. Optimism, I know some people are picking some interest in optimism, and so we see it up there, but it's in the red at this time. Let's see the sentiment, see the prices. There you have it. So it's gone from about 60 to 72. So a greedy market. I guess you'd be greedier, greediest. So it's 72 at this time, but as we always say, doesn't automatically mean that if you want to sell out that you're going to make some profit. So you need to be specific with the management of your portfolio. Bitcoin, we've seen it there up more than 4%. Ethereum, BNB, Cardano, XRP also gained today. Let's have Solomon Amunde. Perhaps he can tell us what happened that put Bitcoin in a green map between yesterday and today. Hi, Solomon. Good afternoon.
Good afternoon, Amy. Good afternoon.
So what happened? What happened in the market? How did you guys move Bitcoin to 46 just like that in a couple of 24 hours or so?
Yeah, this is basically based on the Chinese New Year that is about to happen. We're expecting that this February. And that's why usually, historically, whenever we're approaching the Chinese New Year, people tend to buy lots of Bitcoins 3 days before the time frame, and they tend to sell 10 days after. So it's no surprise that we're seeing Bitcoin above $45,000 at this time of the month. It was very, very expected. Although I expected to start seeing the rally we saw from 2 days ago, I was expecting it from today into the weekend. But it's still perfect that it happened from Wednesday, and right now we're already above $46,000. So it was totally fueled by the Chinese New Year.
So is this sustainable, or is it just a one-off jump?
It's sustainable for the next 1 week, but there's no guarantee that this will be sustainable after the month of February.
That's a very short one. When do we expect a halving impact to start setting in?
Yeah, we need to have, first of all, a pre-halving dump. So we have to see that, which we'll be expecting from next month. Then afterwards, we'll start seeing the halving pump after the actual halving happens. So we should start seeing lots of pump after the month of April.
So we see that the Chinese are getting very busy around the crypto space. The other time we talked about how they are heading to Ethiopia. That's the miners, Bitcoin miners. And is there anything of interest in China around cryptocurrency that is bringing it to attention at this time?
Okay, it's not just a matter of interest, but I would say one of the major things that has been happening, which the Chinese market usually takes a lead in, is the lots of airdrops we've had. The Chinese, they've been known to be one of the biggest farmers of these airdrops, and from last month till date, this year, we've had about total 3 to 4 good airdrops, and this has pumped in lots of liquidity into the market. So you can see that there's lots of free flowing money right now in the market. And like I said, the Chinese, they are one of the highest beneficiaries of these airdrops. They go out all out to farm these airdrops, and they get it in millions of dollars. And obviously, most of them, once they get the money from this airdrop, they pump it into Bitcoin. So I would say that's also one of the things that has fueled most of the increase and profits we've seen in the market, and also liquidity.
All right, Solomon, parting words now. What do we expect for the weekend price movement?
Okay, the weekend, I would expect Bitcoin to make a move for $49,000. We've already tested for 8K early hours of today, and we'll try and make a test for it again and see if we can break it. All things being equal, if we are lucky, we would see $50,000 and max $52K if we are lucky. But afterwards, I only see a downtrend afterwards. So after the next 7 to 10 days, I'm expecting the market to gradually correct to 40K. And once we're out of the month of February, we should go slightly lower.
All right, Solomon, thank you so much for that. I hope we get lucky. It would be nice to see Bitcoin back on 50, but thank you and have a great weekend.
Thank you very much, Imi. Thank you.
All right, just before we go, we'd like to tell you that Crypto.com recently announced the listing of Dimension, that's DYM, a modular blockchain token, stirring interest within the crypto community. And the listing on Crypto.com makes DYM accessible to a wider audience as the exchange supports purchases with over 20 fiat currency. I hope Naira is there. The move is expected to increase the token's trading volume and visibility in the market. The latest development follows Dimension's significant price surge, where its value increased by 100% in just 2 days, with a notable 30% jump occurring after the listing news. At the time of reporting, DYM was trading at $7.82. So I don't know if it's too late for you to get on that, especially if they're trading in Naira. It make it easy for you. Well, that's it for the week. Thank you so much for being a part of Business Incorporated and Business Morning. Been a very busy week. The CBN has been busier though. So by next week, we hope to see the impact of their business, and we will be here to report it. I'm Ini John Mekwa. Have a great weekend, and Ladi will be here 7 p.m. tomorrow for Capital Market. Please don't miss it.